Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon and financial mumbo jumbo. Today we are looking at Jefferies Financial Group and what they are telling the world on the 7th of January 2026. So let us dive in and see what is really going on. Get ready to decode Jefferies Financial Group's latest update, a snapshot of their financial world that you will not want to miss. We have a current report from Jefferies Financial Group Incorporated. This is basically a public company's way of telling the Securities and Exchange Commission, or SEC, that something significant has happened. For those who do not know, Jefferies is a big name in investment banking and capital markets. They are involved in helping companies raise money and advising them on big financial decisions. So when they release something like this, it is definitely worth paying attention to. The main date we are looking at here is the 7th of January 2026. This is when the earliest event reported in this filing occurred. This tells us that what we are about to discuss happened right on that day or very close to it. It is not some ancient history they are sharing. Now, the core of what Jefferies has made public revolves around its publicly traded securities. Think of this as the company's way of listing the different types of stocks and bonds that people can buy and sell. They have their common stock, which is what most people think of when they think of owning a piece of a company. Then they have several types of senior notes, which are essentially loans that investors make to the company in exchange for regular interest payments and getting their money back at a future date. Their common stock trades on the New York Stock Exchange under the ticker symbol JEF. This is like the company's nickname on the stock market. People use this symbol to quickly find and trade their shares. They also have a 4.850% senior note that is due in 2027. This means investors who bought these notes lent money to Jefferies and are expecting to get it back in 2027 with an annual interest payment of 4.850%. The ticker for this is JEF27A. Then there is the 5.875% senior note due in 2028, trading under JEF28. This is a similar arrangement to the 2027 notes, but with a slightly higher interest rate and a later repayment date. Interestingly, they also have a 2.750% senior note due in 2032 with the ticker JEF32A. This one has a much lower interest rate but a much longer repayment term, taking us all the way to 2032. This difference in interest rates and maturity dates can tell us a lot about what the market expects for interest rates in the future and how confident investors are in the company's long-term stability. And finally, the 6.200% senior note due in 2034, ticker JEF34. This is their highest coupon note listed here with the latest maturity date. This suggests that to borrow money for that long, they had to offer a more attractive interest rate. Now let us get to the real substance of this filing. Under item 7.01, we have a Regulation FD, or Fair Disclosure. This means that Jefferies is making some important information public that they are also sharing with investors at the same time. Think of it as them leveling the playing field so everyone hears the news at once. What they announced on the 7th of January 2026 is that they posted their annual letter to shareholders on their website. This is a pretty standard practice for public companies. The CEO or chairman usually writes this letter to give an overview of the company's performance over the past year, discuss future outlook, and thank the shareholders for their support. This letter is officially a part of this filing as Exhibit 99.1. When a document is incorporated by reference, it means it is treated as if it were written directly into the filing itself. So even though it is technically a separate document, its contents are considered officially part of this report to the CC. This essentially means that for all intents and purposes, Jefferies' annual letter to shareholders is now public record for everyone to scrutinize. It is their official communication about their yearly performance and their vision for the future. Moving on to item 9.01, we find details about the exhibits that are part of this filing. As we just discussed, exhibit 99.1 is their annual letter to shareholders. This is where the real narrative of the company's year is likely laid out. It is important to remember that this is not a detailed financial report like a 10Q or 10K. Those reports would have pages and pages of balance sheets, income statements, and cash flow statements. This filing is more about a specific event or disclosure, and in this case, that event is the release of their annual letter. However, this annual letter is crucial. It is where management often provides context and color around the raw numbers. They will discuss their strategies, their successes, their challenges, and what they expect for the next year. For investors, it is an opportunity to hear directly from leadership about the company's direction. The other exhibit listed is the cover page interactive data file. This is related to how the information is presented digitally for easier analysis by computers and regulators. It is more of a technical requirement for electronic filings. Finally, we have the signature section. This is where authorized representatives of Jefferies Financial Group Incorporated sign off on the report. It is a legal confirmation that the information provided is accurate and complete to the best of their knowledge. Here we see the signature of Michael J. Sharp, who holds the title of Executive Vice President and General Counsel. This confirms that the company has officially submitted this report. So what does this all mean for Jefferies Financial Group and its investors? Well, this filing itself does not contain any new groundbreaking financial figures beyond what might be in that annual letter. It is more of a notification that the company has communicated with its shareholders. The real story is in that annual letter. That is where we will find the details about how Jefferies performed in the past year and what their outlook is for the coming years. We will have to assume that the letter discusses their core businesses like investment banking mergers and acquisitions and capital markets advisory. We will also be looking for any mention of market conditions, geopolitical events, or regulatory changes that might have impacted their business. In terms of financial health, we can infer some things from the publicly traded debt. The varying interest rates and maturity dates on their senior notes can hint at market perception of their risk over different time horizons. For instance, the higher rates on longer-term notes could suggest investors demand a premium for holding debt for longer periods, perhaps due to perceived future uncertainties or interest rate expectations. Looking at the strength of Jefferies, we know they operate in a very competitive industry. Their success hinges on their ability to advise clients, effectively secure deals, and manage risk. A key indicator of strength would be consistent deal flow and profitable execution of their services. Weaknesses could emerge from market downturns, increased competition, or regulatory challenges that could impact their deal-making capabilities and profitability. The main opportunity for Jefferies likely lies in leveraging their established relationships and expertise to capitalize on market opportunities, whether that is through advising companies on mergers or helping them raise capital. A significant risk would be a prolonged economic slowdown, which could reduce the number of deals and the fees they can earn. Also, the financial services sector is highly regulated, and changes in regulations can create both challenges and opportunities. Based on this filing alone, without reading the letter, it is difficult to give a precise financial assessment. However, the fact that they are actively communicating with shareholders through an annual letter indicates a commitment to transparency. We will need to read that letter to get a true picture of their direction, their strengths, and their weaknesses. Alright, that is our breakdown of this particular SEC filing from Jefferies Financial Group. What are your thoughts on the importance of these annual letters, and what do you think Jefferies will be highlighting in theirs? Let us know in the comments below. If you found this decoding valuable, hit that like button, and most importantly, subscribe to Corporate Decoder for more insights into the world of business and finance. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, see you next time.